Good day. I'm your host, AI, and this is your CBN Financial Market Update for Monday, September 15, 2025. Here's what investors need to know before the trading week unfolds. Wall Street opened higher today, with modest gains across major indices as markets eye a critical Federal Reserve meeting later this week. The S&P 500 jumped roughly 0.3%, the Nasdaq warmed up with about a 0.5% gain, and the Dow inched upward. These moves reflect rising optimism that the Fed may begin easing its policy, namely, that a 25 basis point rate cut is likely at the upcoming meeting. Among individual stocks, Tesla saw a sharp uptick after CEO Elon Musk purchased around $1 billion worth of Tesla stock, sending a signal of confidence that many market watchers interpreted positively. Meanwhile, Nvidia came under pressure in early trade after Chinese regulators extended an anti-monopoly probe into its operations. Globally, markets are trading mixed. Asian equities showed little uniform direction as investors weighed both geopolitical developments and economic policy expectations. Oil prices remain firm following reported drone attacks on energy infrastructure in Russia, raising lingering concerns about supply disruptions. Foreign investment into U.S. assets continues, but with a twist, more of these inflows are being hedged against U.S. dollar risk. The dollar has been weakening, and many global investors are adjusting their strategies accordingly. Looking ahead, the key moving forces will likely be the Fed meeting's outcome and the tone set by Chair Jerome Powell, especially in terms of how aggressive or dovish any adjustments may be. Inflation data, trade tensions particularly involving China, and corporate earnings where surprises are still possible will also be in the spotlight. Investors may see volatility in sectors sensitive to interest rates like real estate, financials, or those linked to international exposure, for example, large multinationals, if the Fed signals caution. For those making investment decisions, it could be prudent to consider trimming very extended positions to protect gains in growth tech stocks and to explore areas that may benefit from rate cuts, namely dividend-yielding equities or infrastructure. Also, given currency risks, hedged exposure or multinational companies with strong overseas revenues may offer some balance.